Hey, good morning, everybody. It is Thursday, November 21st. It is ahead of the market open. I hope you were able to check out yesterday's video on GameStop. I posted that. I know it was right at the market open. I know it's a longer video. I know time is money. That's why I said bookmark it, like it, watch it later. We had identified some areas to watch. We talked about some levels, some things that I was looking for. One of those was the 28.59 and the 29.79 level. We talked about that during yesterday's video, where those levels, the 28.59 was the previous day's high, and the 29.79 was our high in July that we had talked about. Looked at some of the gamma and the open interest around $30. That was kind of what we talked about. If price got up to those numbers, those levels that we were talking about, that's where I was kind of would get excited more about the open interest and the net gamma around the $30 mark. But let's take a look at that yesterday real quick at the chart, and then we'll drill into some options data, and I promise I'll try to make this very short and sweet for you this morning so you got time to, take it all in and then get back to what you were doing. I know, time is money, but I'm long-winded, and I want to see you lose less and win more. I've been talking about this a lot, especially with GameStop and weekly call options. A lot of people buy at the top of the peak, the FOMO, and then the option volatility changes and the premium drops, and then it's right back to Friday expiry and they're worthless again. It happens week in and week out and has been for years, and that's why I'm continuing to make the videos, just try to make it easier. So yesterday, we had been talking about that 27.21 level. That was our year-to-date VWAP. So if we go back to January 1st, and we just anchor our VWAP there, we can anchor it back to January 1. So it's a year to date here. And let's see, right around there, year to date, let's see, January 1, January 2nd, opened at 1726. That's where the stock was at. So using the volume weighted average price, we can see that came into play in July, and that's where that level came from. If you look up at the top of your screen there, the high is 29.79. And that other high we had mentioned yesterday during the vid, 28.58, which was the high on November 15th. So that's where some of those levels were coming from. In addition, we had talked about, for the last few months, about the significance of that $25 level. For that reason, the point of control. So if we use volume by price, a common indicator, you can use. I've anchored that back also to January 1 just to try to give a longer time frame on the data here. That's where the bulk of the transactions had been occurring, was at this 24.84, 24.85 level. So that 25 level, that's where that significance had become. And as we noted during yesterday's video, we saw as we moved towards that $25 area, especially where all that gamma had been increasing the last few weeks, we did so. And we did so with higher volume on the commons. And that's kind of something you want to see. If you're going to get a move, you're going to get a push, you're going to get some higher volume. We're kind of thinking we're going to start consolidating at 25. Is the base 26? Is the base 27 around the year-to-date volume-weighted average price? The volume and price will always dictate the story. We just try to piece together, the hypothesis with, the options data. What's the actual volume looking like? What's the price looking like of the options? Are there more being bought? Are they being sold? Are they hitting the bid, hitting the ask? So a lot of different things you can use to kind of formulate. How's the sentiment? Are there any headlines on the stock? A lot of different factors. And hype. There's a lot of hype also. A lot of hype. So yesterday, a little bit higher volume on that breakout, and then a higher high. We saw those levels, 29.80. There you go. That was 1 penny above the 29.79 high in July. So that's going to be a level of an area of resistance. Now, it doesn't mean you can't form a base in this range and then begin testing that. But that was a good sign to see on higher volume yesterday. Doesn't mean that it's a guarantee. It just means, hey, something in the past has happened. Price sometimes has memory, and you've seen that come back around. Now let's look this morning here. I haven't even looked this morning to see where we're trading at pre-market. I'll just flip on the pre-market data so I can get a price. 28.49, 28.76. There you go. So still above the year-to-date VWAP and below that 29.80. So 29.79 above brings in that $30 gamma like we talked about in open interest. So let's take a look at that yesterday though on GameStop. 8.3 million in net call premium. So albeit there was 70 million in premium, which is about twice what a big day, which is 30 mil, has been. And I'll show you the historical here in a minute. But as price moved up, you see put premium stayed flat, pretty much consistent throughout the day. Net call premium did rise up into that high, the 28, and then the 28 again, 29.71. As we get up there, you kind of a little bit of profit taking, but still overall, net call premium remained high, even though stock moved down, still to back about above the open. Still great. I mean, it's not just going to go up and the stocks move up, they move down. I know. We only want them to go up, right? No, I'm just kidding. But you can see there at the peak was about 9 million net call premium. So to end at 8, just a little bit of money came off the table. Stock is still up 62% year to date. Absolutely nothing to be wrong or nothing to be mad about there. There's nothing wrong with that. Now, we're not going to spend a whole lot of time, but here, I'll let you zoom in here. I'll zoom in, let you look at the highest volume contracts. Generally, they're always the weeklies and usually out of the monies. The 30s for this week, 30s for next week, though. 28s for this week, 29, 40. 27 and 35 for this week. Those were your top ones. Again, like we talked about in the past, the volume kind of split both buyers and sellers, and I'll demonstrate how that works here in just a second. See the 125 calls, more on the bid side, probably selling those. Might as well sell those, take free premium. I'm not saying free, but for example, if I sell a 125 call, I'm going to receive this premium up front. As long as GameStop doesn't go above 125 by January, on expiry, I'll keep that premium. It's kind of a safe trade because worst case scenario is then if GameStop were to go above 125, then my shares would get called away at 125. Nothing lost. So if I owned shares at $12 from this summer, I would have no problem selling my shares at 125 each. So that's kind of the short and sweet there. Why you would sell calls to generate income, which a lot of people have been doing on GameStop and AMC for years. Like I said, we look at that historical though. Yesterday, 69 million on the total premium, 29 mil the day before, 29 mil then on Monday, and then Friday was 55. So you can see, for example, 66, 67 back on November 13th and 12th, and then on the 11th, 101. So still a pretty strong day in terms of total premium, but the main focus is the net premium, and that was a positive at 8.5 million. So let's take a look actually at the contracts by highest premium yesterday, and then we'll take a look at the open interest here. Make sure we're looking at the most current data. So we'll zoom this back out for just a second. So our top contracts here, we're going to be sorted by premium. So we're looking at this column here. And we see we got the 30s for this week, 30 for next week, 28s, 27, 25. Those $25 calls for January, 29 for this week, 25 for December, and then 29 calls for January. Those were your top ones with a million or higher in premium. So let's take a look at the 30s because similar scenarios. I've been sharing videos the last couple of weeks, but for the last few months we've talked about if we see momentum during the week on GameStop, this will introduce a lot of call buying up here as volatility and the premium spikes, and then some people get upset that they bought here and then now the contract's down here. That happens week in, week out, especially with out of the money options, especially with high implied volatility. Yesterday was 123% IV. 4 million traded, 4 million total roughly in total premium, but you can see again split between the bid and the ask. So yesterday 52,000 volume on those calls, okay? But only 775 appeared in open interest, new open interest. So all that volume, even though there was 25,000 at the ask, 22,000 at the bid, not really anything appeared in new open interest. The reason is people buy, sell, buy, sell, buy, sell, scalp, sell them here, buy them back. It's very common to take profits. That's the whole point of trading, is to minimize your losses, cut your losers quickly, and take profits. Now, for example, on the $30 call, you got in yesterday at 30 in the morning. Great. You wrote it up. Maybe you trimmed. You took some profits along the way to 114. Great trade. But if you bought up here, now you're down here. So you're going to need even that much of a larger move because today's Thursday and these expire tomorrow. And this happens week in and week out. See, the same people that will buy up here and they'll be upset and blame a market maker or somebody. No, it's on you, unfortunately. And it's a tough lesson. It's a tough lesson to understand. It's cutting a loser quickly, knowing when you're entering. You'll see the posts and you'll see people, hey, this is what we're doing. And they get behind the move instead of ahead of the move. That's why I try to put these videos out ahead of the market open. Try to give you guys some alpha and some things to look for ahead of the move. Like yesterday, these are the levels to watch as we saw the option premium move in. Those were some things, to consider. So I just hate seeing this week in and week out. where you get the same type of spike. I mean, for example, last week into the expiry was the same thing on these 30s. We'll just use them as an example, where in the beginning of the week they were low, then they moved up, doubled, but then by Friday week's end, they're already faded. And that's due to the IV and the implied volatility. And you're close to expiry. So it's at that point, it's like you're lighting your money on fire. You might as well just not use your money and hold it because cash is a position is a good thing. Buy common shares in that instance because albeit the stock can move up and down, you won't lose the value per se like you would with theta. When a call option expires worthless, it's gone and over. Your shares being down 10%, that's a completely different story. So for the 30s, let's look at the 30s though for next week. A very similar concept. 23,000 volume yesterday, but only 3,800 at new open interest. Again, buying low, selling high, or selling up here and buying back. Some people could be selling here on the implied volatility spike. So the IV yesterday was 115%, but as price moves up, IV moves up and so does premium. So if you start getting buying up here, of course you're going to be frustrated when it comes down here. This is avoidable. This all comes down to risk management. For example, let's say that I bought these calls at 120 or 130, for example. It moved up. Okay, 156. I'm already trimming some of those. There's no point to get greedy, especially in a high IV with something. I mean, granted, it's a little bit more expiry for next week. And then up here, I would have been completely out because it's a weekly trade. It doesn't matter. You can always enter another trade. It's that idea of this is the one, it's going to squeeze or it's going to the moon that makes you think it's going to go to 500. Then you're back here where you started. That can be avoided. So for another way, so say, for example, let's say I chased it too. Let's say I bought it 200. The second that thing even was down here to 150, I would have already left. That I'd try to use tight risk management. I'll cut my losers very quickly. 10, 20%, I'm gone. I can then revisit the idea, revisit the trade, redeploy my capital if I still feel the same, sometimes get a better entry, or sometimes the validation or invalidation of the trading plan has changed and I just leave completely and not revisit the idea. So risk management really is the most important thing when it comes down to trading and preserving your capital. And no, some of these, especially with weekly out of the money call options, a lot of those mistakes can be avoided. So that's hopefully what we can try to do collectively together. Same with the $28 calls this week. Buying low, they get alerted on unusual whales. People start chasing them at 140. Then they start buying them and chasing them up here at 190. Great. I mean, if you got in at the bottom and sold up here, you made profit. The problem I'm concerned, a lot of people start buying around here at the hype and then get faded. They buy as it's up instead of coming in, looking for like a $27 entry, maybe around a moving average, maybe around a previous day's low, grabbing an entry there as opposed to grabbing one at the top because you feel like you're missing out. That's FOMO, and it can be damaging. It can be very expensive too. And then take a look. Example, 21,000 volume on those calls yesterday on the 28th. Nothing appeared in new open interest. So even though all that premium, look at your ask, 11,000, and compare that with the bid. It's buying and selling. It's back and forth. I buy low, I sell high, I sell up here and buy it back. That's happening. There's a lot of people that are very active trading on GameStop, whether they're long on the stock or care about the company. There's opportunity within the option chain and the volatility, and that's going to be used, exploited every single time, and has been, to be honest with you, since 2021. I'm probably assuming the same story with the $27 calls. Let's see, 2.5 million premium yesterday. Again, 13,000 volume, almost 14,000, but a big change there in the open interest. So even though you might have saw, hey, someone might have posted this even because it was alerted on unusual whales, the $27 call for a volume greater than open interest. You might have said, hey, that's the one, I'm jumping in at 221. Okay, sure, you got the move to 277. Did you lock profit? Or are you sitting back here at 150, 170? Now, 27, they're in the money. You're right. But as we move closer to expiry, the value becomes less due to theta. So if the implied volatility changes, there it is, changes the option premium. So this looks good. You would think, okay, wow, this is a lot of volume at the ask. Oh, this is bullish. Well, it's not because it closed down. That's what happens. Price moved down as well. So you got to sometimes be careful with the posts out there. A lot of posts especially with unusual whales where there's no context. I try to post the context for it. If there's net premium, if there's calls, is it buying and selling, a mix of buyers and sellers. Very important to add the context, because without it, you wouldn't know. You would just think, okay, here's where it's at. Here's what we're doing. So still a great move because GameStop, like I said, 8.5 million total net premium. So because that net premium, a lot more calls getting closer to in the money, at the money, just adds additional upside pressure as market makers, option dealers hedge those options with common shares. And then, for example, is say your take profits on calls, market makers and option dealers can then sell those shares to as they don't need those hedges, which then can create downward pressure on the price on the stocks. That's something to be aware about. But you're seeing the same thing week in and week out on the weekly call options, especially the out of the monies. We'll look at these 25s for January. Again, some volume yesterday, 2,700, but open interest decreased by 254. So even though 2 mil, a lot of that volume, let's see, 1384 at the bid, 1284 at the ask. So again, split between buyers and sellers. So it could have been selling here, buying back here, selling here, buying back. It really it just depends. Somebody could be trying to obtain shares at 25. Because we talked about the $125 puts. Think of that as nothing more as a way to obtain $25 shares. If I sell an in the money put of $125 and I receive the premium 10,000, market makers happily going to sell me shares at 125, which cost me 12.5. The difference of the premium I received 10,000 and what I would pay to get those 100 shares at 125 is 12,500, which is a difference of $2,500. Now divide by the 100 shares, which represent each contract, is $25 a share. So when you were seeing those posts about the 125 puts, that just think $25 shares in your mind. So think of that in the money, deep in the money put option. Just think of it as a short position. And stock goes up, I can get shares at $25 going that way. So just think of it like that. Also, the other day it was only 480 volume on those 125 puts, which only represents 48,000 shares. So also something to be thinking of as well. But let's look at the open interest this morning. I know we looked at a lot of them just by kind of evaluating each of the calls here. But let's take a look at actually the updates to this morning. So we can zoom this in here a little, let you take a screenshot. Let's see, the highest open interest was on the $30 calls for next week, the $55 calls for this week, 40s for this week, 60s for January. So not a big increases in any of those OIs. And so the decreases, like we talked about already, in the 27 for this week, probably some profit taking, as you should, especially during a high implied volatility. When that IV spikes and the premium spikes, it's in your best interest to take profit, especially on a name like GME. $19 puts, let's see, the 1220, whether he probably bought and sold. Exactly. So look at the transaction size. So yeah, I'm not even going to really look at that. They're out of the money and it doesn't matter at that point. Let's take a look here though. We'll go back over to that gamma here in a second. But like I said, even though you see all that volume, you see some net premium, it's still there, but not a big change, in open interest that would say, hey, this is where it's going, or this is what we're thinking. Just like I said, always watch those levels. I prefer to use moving averages. I think that's what's most important to look at, where price has been, give some idea where price could go. So like we said, we covered this yesterday during the video. We talked about that $30 strike. I know as we moved closer to it, spot gamma here. That is the assumed dollar value of gamma exposure that market makers need to hedge per 1% change in the underlying stock. So positive value, long gamma, negative value, short gamma. You can see yesterday, net gamma exposure, 2 million here, and then the gamma per actual price. So the money, 17 mil, the gamma exposure on shares, 2 million. So as that moved closer, that got a little bit more volatile. You've seen the price move up as options dealer have to, basically continue hedging these other calls that are now getting in the money or closer to the money. So when we look at that gamma here again, that's what I was talking about 2-3 weeks ago. We were seeing the 25, and as price got closer, we became more volatile and we saw upward movement in the stock. And again, that net gamma is really tight at 30. Now, exists at 28, exists at 29, heavy at 30. That's why I talked about it yesterday. And then we look at net gamma by expiry. It's this week as well as next week, but the highest level of concentration with this week. So the closer you get to 30, 28, 29, 30 or above, it could really get exciting only because of that gamma pressure on the stock. And then January, like I said, January 17th is that next highest. So if we look at the actual delta exposure, you see it's kind of been increasing as it would with price. Again, in the 25, 20, 25, 30 on that net delta, it's strong, and that's where we're at in this price range here. So like I said, it gets a little more explosive as you get closer to these higher deltas. This is essentially the 20 was built, 6-7 weeks ago. The 25 ramp was kind of built about a month ago, which we saw. The 30 ramp kind of was initiating. I mean, anything above 30 and then introduces that 35 and 40 ramp. So that's kind of what's been happening in regard to the option chain. The highest net delta transitioning out to the January expiry, with this week and next week being the next highest. So something to keep in mind there. Let's look at the actual, see which date I wanted to show you here. We'll flip back over in just a second. That gamma exposure there. So see our call GEX been increasing a little bit, and then net GEX has been increasing. So it's kind of what you want to see in terms of like when price moves up. That's kind of the things you want to see positive that support the move. In addition to that, like I said, that spot gamma getting close up there at 30, definitely tested that yesterday and got a little more dicey and a little more expensive. And then you saw some of that selling off, whether it be profit taking, repositioning. So we will definitely be watching the price. Just continue watching price, continue watching volume. We'll continue monitoring the option flow. And just because you see a bunch of calls coming at the ask doesn't mean it's bullish. Just because you see a bunch of puts being sold also doesn't mean bullish. And just because you see a bunch of calls being sold off as bearish, not necessarily. For example, I could be rolling calls. I want to take profits and move my position to December. So you might see a lot of calls being sold off in that regard and then repositioning. So as we look, let me just pull up here a little pre-market time because I'm still way ahead of the open. Just wanted to see price this morning here. And this was yesterday, that 29.80. And then this morning here, 28.90. So still above that 28.59, which were that previous daily high. See, it's a good looking chart. I mean, in terms of volume, once you're in this range here, you pushed above this point of control on higher volume and sustained volume, and tighter in this range here, and yet a new higher high. So it's anybody's ball game. Nobody's got a crystal ball. We'll just continue watching. I know yesterday when I put those levels out and referenced the other levels and then seen the price hit that, I'm like, wow, that's pretty awesome to see. And those, like I said, those were that July level, and then that previous 28.58 high on the 15th, and then the 29.79 high on July 17th. That's where those levels had come from. So that's what I got for you today. Hopefully you can check it out, bookmark it, like it, repost it. I will probably be backfilling a lot of these videos on my older YouTube channel, probably bring that back and just rebrand that. So that way maybe the longer form content is also available on YouTube. I know a lot of people want to keep, the X just to post and the YouTube for the video, and I get that. I'm just trying to provide, a wide range of information. Data sometimes isn't, for me, just in print. Sometimes, I'm always very long-winded, as you know by the length of these videos, but I feel like I always have something more to share that I can't sometimes consolidate to a post. And that's why I like to add the videos. I respond well to video. I enjoy video, but when I look at the analytics, a lot of the video is not being watched, and I get it. It's a lot of time, and I'm not here to take your time. I know time is money, so I just try to provide a little value, a little bit of education, a little bit of knowledge. I know there are a lot that appreciate it because I see the replies and the messages. And as always, thank you for your feedback on that. I do appreciate it. But yeah, it's Thursday morning. Hopefully you get a chance to watch this ahead of the market open. We'll continue monitoring the options, the volume, the price, and trade the price, trade the volume, trade the options data. Don't trade your feelings. Avoid those weekly call options, especially out of the money. And please buy low, sell high on the IV. And if you're the other way around, you've been having a great time selling high IV and buying it back on the low. So I hope you guys have a great day. Like I said, bookmark it, like it, repost it, go back, watch it later, watch it after the market closed to see how it reacts, compared to like what you watched and then what you saw. Sometimes it's good, it adds to the understanding. For example, like I'll sometimes go back and watch my older videos just to see what we talked about, see how it played out, see what compared, see if anything changed. This is always evolving. It's you're going to get out of this what you put in. I've had people that scoff, hey, those are long video, I'm not going to watch that. I understand. And unfortunately, those are the same people that are buying $35 weekly call options at the top on GameStop and get rugged week in and week out, lighting their money on fire. It's not my job to trade your book, but I love to share data. I love to help others. And I know you're all smarter than me. So I'm pretty much probably talking to falling on deaf ears. Is that the expression? But anyway, I don't want to ramble too much. Hope you guys have a great day. And I do appreciate the support. And hopefully the videos do help you. If you did make it all the way through to the end of the video, let me know that code word wolf video. If you watch this all the way through, comment wolf video. I do appreciate it. Good luck out there today. Happy Thursday, and I'll see ya.